Hello and welcome to 3.0 TV. I am Ruchi Sharma.
And I am Vishakha Thakur.
This past week has been challenging for both Bitcoin and Ethereum as both cryptocurrencies saw significant corrections. Bitcoin's price dropped by around 10%, largely due to massive outflows from Bitcoin ETFs in the US, pushing Bitcoin down to $58,000 mark. Ethereum also faced difficulties with minimal demand for Ethereum-based ETFs, contributing to its over 10% decline, bringing its price below $2,500.
Very true. So if you talk about both the assets, they were affected by global macroeconomic factors, including hawkish statements from US Federal Reserve, which hinted at maintaining higher interest rates and suggested another rate hike before year-end. Well, this spurred a broader sell-off in the crypto market, with investor sentiment remaining bearish.
More than 15 days after they hacked WazirX exchange and stole cryptocurrencies worth $234 million, the alleged hackers moved 5,000 ETH worth 100 crore rupees on Wednesday in process of laundering them through Tornado Cash mixer.
Well, that's a huge amount, and in the past 3 days, the WazirX hackers have transferred roughly around 7,600 ETH worth rupees 152 crores of user funds to different addresses in order to launder them.
According to blockchain analytics firm PeckShield, the exploiter has transferred 5,000 ETH worth approximately $12 million to a new wallet and is gradually sending the funds to Tornado Cash.
That's correct. Moving on, the landscape around the spot Bitcoin ETFs in the US has changed dramatically since a few weeks ago when investors showed significant demand. So the current data shows 6 consecutive days of consistent outflows, with September 3 being the worst in terms of flows since May 1.
September 2nd was a national holiday in the States. However, the negative sentiment returned on the next day, which actually became the worst since May 1st, with $288 million withdrawn from the largest ETFs. September 4th was also in the red, albeit in a less painful manner. $37.2 million was taken out.
So unlike the spot Bitcoin ETFs, the Ethereum counterparts have failed to attract any substantial demand from investors. The numbers are usually in the low double digits, with red dominating the charts. So the past 2 trading days were quite painful as well, with $47.4 million withdrawn on September 3rd and $37.5 million taken out on September 4th.
Elsewhere, Brazil's central bank selected on Wednesday 13 participants for the second part of the pilot of its central bank digital currency called Real Digital.
Well, Visa was selected to optimize the foreign exchange market, while Santander plans to work on a project involving automobile operations.
The second part of the pilot will include other important local financial entities such as Bradesco, Itaú, Unibanco, and the local stock exchange B3.
So in another interesting update, data from Bitcoin on-chain analysis platform BitBo shows that miners of the largest crypto suffered their worst month in nearly a year in terms of revenue generation.
So according to figures available on the dashboard, BTC mining activity secured $827 million in August, a more than 10% decrease from July's $927.35 million.
So the on-chain fees were not spared either. Data from the block shows that a network participants received about $20.76 million in the past month, which is around $4.14 million shy of the total recorded in July.
Moving on, the world has moved a step closer to unifying its goals and values related to artificial intelligence following a meeting of Council of Europe Ministers of Justice.
So the United States, the European Union and the United Kingdom are expected to sign the Framework Convention on AI. Well, the treaty highlights human rights and democratic values as key to regulating public and private sector AI models.
The Framework Convention on AI would be the world's first international treaty on AI that is legally binding to its signatories. It would hold each signatory accountable for any harm or discrimination caused by AI systems.
So interestingly, Mark Karpeles, the former CEO of defunct crypto exchange Mt. Gox, will launch a new crypto exchange called LPX in September.
Based in Poland, the platform will initially serve European users with plans to expand globally. It will start as crypto only but potentially add banking and fiat currency services later.
So LPX aims to comply with the European Union's markets in crypto assets regulation or MiCA and promote transparency through regular third-party audits.
Additionally, Japan's financial regulator has released plans for a comprehensive overhaul of the tax code for fiscal year 2025, including provisions provisions for crypto assets that could lower their tax rate.
That's interesting. And in the August 30 request for tax reform, Japan's FSA, or Financial Services Agency, highlighted crypto assets, pushing for them to be treated like traditional financial assets that the public can invest in.
Moving on, Polygon's native cryptocurrency has executed a key technical upgrade to enhance its utility and usher in Polygon 2.0. Polygon's token was upgraded to its new Polygon Ecosystem Token (POL) token on a 1:1 basis, becoming the network's native gas and staking token as of September 4th.
So while Matic was only earning fees from gas and staking, the new POL token will also earn fees from additional actions such as staking to secure data availability or decentralizing a sequencer, with more fee generation options on the horizon.
According to the CEO of Polygon Labs, POL has evolved into a hyper-productive token, enabling the community to engage more effectively in the network's growth.
So in another news, the Runes protocol has hit a major milestone, surpassing 50 million inscriptions less than 5 months after its launch on the Bitcoin network. According to a tweet by the market intelligence platform Into the Block, the milestone indicates continued usage despite the initial hype fading.
Runes is a Bitcoin token standard enabling the creation of fungible tokens on the network. Developed by Ordinal's creator Cassie Rodamore, it allows users to create their own tokens on Bitcoin, a feat that was not possible a year ago.
And lastly, non-fungible token marketplace Magic Eden had the largest market share in August, surpassing competitors like Blur and OpenSea in NFT trading volume.
On September 4th, crypto data tracker CoinGecko highlighted that Magic Eden recorded a trading volume of $122.47 million. This represents 36.7% of the total NFT market share, bringing the platform its 6th consecutive month at the top of the NFT space.
So Magic Eden is an NFT marketplace that allows users to create, trade, and collect NFTs. The platform supports NFTs based on Ethereum, Solana, Polygon, and Bitcoin.
Well, that's all in this episode of Weekly Wrap. This is Murchi Sharma signing off.
And this is me, Vishakha Thakur, signing off. For more on such updates and market news, please log on to our website www.3versetv.io or scan the QR code. Have a great weekend.